Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, January 9th at about 2 p.m. Eastern. Well, the U.S. Labor Department ended 2025 on a soft note with job creation in December less than expected, according to a report today from the Bureau of Labor Statistics. Non-farm payrolls rose a seasonally adjusted 50,000 for the month. At the same time, the unemployment rate fell to 4.4% compared with the forecast for 4.5%. So that's a good thing. And now let's go on to three charts that could give us some insight into the week to come. Okay, give me a minute here. I didn't get my pointer done yet, so give me a second. I don't want to start at the beginning again. Here we go. Okay, so first of it, we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $693.96. That's about $694, isn't it? Touching a new all-time high above the prior highs set in the last 2 or 3 weeks, and actually a couple of months ago. It just keeps coming up here to 690, 691, and so today we made it up to almost 694. So we'll see what happens from here. Of course, the SPY is sitting above the 20-day, the red line, the 20-day moving average at 685. And the green, this 50-day moving average at 680 down here, and the 200-day moving average, the black line down here at $630 and change. Now, we know that for the most part, the SPY has been walking up its 20-day moving average, and you can't see it on here, since rallying off of its April lows, which were further back on the chart. In April, of course, everything fell on April 7th, and the SPY fell down to 481. That was its April lows. And then rallied from there and started walking up. You can see the chart here starting in the middle of June, and the SPY pretty much walked up its 20-day moving average since rallying off those lows at 481, and then trading in an uptrend. You can see it all the way up here till it hits these October all-time high at the time at 690. From those April lows up to this high has been a 44% gain. So really cool, especially if we bought at the low, right? Back in, we can see though it was walking nicely and very calmly up that 20-day moving average. Then it kind of weakened here in October, and it's going to. That's a heck of a run. It's going to. There's going to be profit taking coming in. So before this October high up here at 690, it did fall. It showed a little weakness here. It's like, okay, some profit takings coming in here back in October. Then it rallied back up to this October high right here. Then it came down in November down here to 652. And then it rallied back up to this uptrend and kept walking up the 50 and the 20-day moving average as it had been, back up to where we are now, again at 693 and change, 694. So we have this uptrend. It's been going for quite some time. I think that some traders were getting nervous, saying this is getting overdone here. And yes, I know we have a lot of good news, and that's fantastic. But markets move in cycles. They don't move straight up. And as I always say, please God, they don't move straight down. So anyway, we could be getting, we've been talking a lot about the market taking a breather and so forth, but it's remained really strong. We just saw a couple of these hiccups here back in November and in October. It started not past the 50-day, but it started looking a little nervous here. So anyway, we're back up today. And now we have to see if the SPY can continue this uptrend in 2026. We've got a lot going on. So we know here that our resistance right here, what we have is 693, 694. Now we have nearby support here at the 20-day at 685, 50-day at 680. We've got this little pivot down here at 671. And on down here to this low at 652. The 200-day again down here is 630 and so forth. So it looks great. It's just, can it keep going? Of course, we're going to face the fourth quarter earnings season pretty soon. And in the coming week, we're going to get the CPI, the Consumer Price Index, the PPI, the Producer Price Index, and we'll get existing and new home sales. So that'll be interesting. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This, of course, is the ETF that follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market, including the large cap momentum stocks like the Magnificent Seven, NVIDIA, Meta, Alphabet, Tesla, that whole group. Now, when I captured this chart today, the Qs were trading at $627.39, so call it 627. Of course, below this October all-time high up here at 637. And at the moment, where the SPY is right now, both moving averages, the 20-day and the 50-day, the red and the green line, are coming in right on top of each other at 617. If we look south here, we can see, excuse me, the 200-day moving average is coming in at 561, 562. Now, as we know, back in April, you can't see on this chart, the Qs made an April low at 402 on that famous April 7th day, then rallied from there all the way up to this October high up here to 637. That was a 58% rally, and that's a big darn deal. Of course, a lot of it was due to AI. We will say that. But anyway, that's quite a run. So from the highs in 637, the Qs fell back down here to 585 in November, rallied to 628 up here in December, then fell to 600 down here, then rallied to where we are now at 627. And of course, if we want to here, we can take out our crayons and we can draw a triangle, pretty much like that. And we know that that triangles usually break out up to the downside or up to the upside or down to the downside. Most of them you want to do something one way or the other by the time the price pattern is maybe 2/3 into the triangle. This one's getting pretty well used up here, so this is going to be interesting to see next week how this is going to play out. We've got a lot going on in this country right now, and certainly a lot of good news. So be interesting to see what happens here. So in the coming week, when we're looking for what's going to happen here, technically anyway, we know that nearby resistance is, we'll call it 628. And right here, I'm sorry, we've got that pivot right here. So it's coming in at 628. Then we've got the highs at 637. We have support down here at the moving averages, the 20 and the 50 at 617. We've got this little bounce here at 600. And we've got 585 support down here. So lots of support, potential support levels if the Qs need it. And of course on down to the 200-day at 561. So the candle today, anyway, the Qs look a little more energetic than they have actually in the last couple of weeks. So I like the looks of today's candle. I just hope it keeps up next week. So stay tuned, and we will see if tech stocks especially can rally from here. Our final chart today is a daily chart of the iShares Core US REIT ETF, symbol USRT. You know what a REIT is. It's a real estate investment trust. The USRT has 134 top holdings, including Welltower, Prologis, Simon Property Group, Digital Realty Trust, and Realty Income Corporation. So when I captured this chart today, the USRT was trading at $58.14. Now that's above its red line here, the 20-day, which is coming in at 57 and change, but the 20-day is inverted to the 50-day because this ETF has been going sideways for quite some time and then dipped a little bit. So the 20-day moving average came down. It's starting to come up again today, and it got down below the 50-day, which is coming in here at $57 and change. 57.63, and a few cents lower. The 20 days coming in at 57.24, so we'll call it down here. And the 200 days coming in here at 57.14. So that's all pretty much together there. Now, just looking at it, this could be a good setup if interest rates do in fact move lower. Because of course it has to do with real estate. The U.S., if we look left on the chart, it's hard to see, you can't see it, but the USRT has been moving up gradually since its April low, and it made an April low down at about 49. From there it started moving up, walking up its 20-day moving average, finally up to its 200-day. And you can see here how we're back in June here, how it was trading beneath the 200-day moving average here. Look at how tough that moving average was when price is trying to get up and come over it. It just can't do it. So interestingly enough, it came back down here. It was trading came down at these lows below the moving average, below the 20 and the 50-day, then popped really dramatic up here in August and moved up to about 59 and change right here, then fell back down. So it finally got back over its moving averages and then started popping up, trading down here to about 56, then popped up to 59 on its way to 60, then back down, kind of trading in a range here because interest rates haven't been moving that much. And that affects this particular, the holdings in this particular ETF. So there's been guesses as to where they're going to go. But now price came down the last couple of weeks down here to 56.50, then popped back up to where it is now at 58.14. So it's been kind of trading in a range here, as you can see, from 56 to 59, 56.50. And to where we are again at 58.14. So if in the coming week, if the SRT, my hope, which we can't have in trading, is that it breaks out here and keeps going. If it does appear like interest rates will get a little lower, we'll have to see how it goes. I didn't want to buy something that's overbought today, and a lot of ETFs have broken out there and overbought. So if in the coming week the USRT can stay above its 20 and 200-day moving averages down here, so just call it, if they can stay, if price can stay above these two moving averages, call it $57.30 if you need a number like that. If it can do that, I will buy a small position of the USRT in my trading portfolio. I'm going to put in a stop here pretty close at 56.50. Pretty close at 56.50. I'm not going to give this one any room. If it can stay above these two, I'm going to put my stop in at 56.50. When and if the XRT can climb up above 59 and close above it, and that's right up here. If it can close above 59, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the USRT in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time. Start out the new year, right? A great time to check out my timeless training programs. How to swing trade successfully, right here, shows you how to enter during upswings, grab the sweet spot from the price move, and pocket your profits before the price starts lower. I always say you're going to be taking the center out of the Oreo. So when it starts up like that, You get in there, you take the center out of the Oreo, and then when it looks like it's going to start down, or it does, you get out and keep those profits. You'll discover how to trade with my Sleeping Tiger setup and use it over and over again to make consistent profits. I've been trading with that for years, and a lot of people have been too. Our new low price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So, from our ever-popular 7 steps to successful trading, to how to swing trades successfully. Again, you're going to love this. Trade the trend to profits. I like that one a lot. How to read charts, great for novices. 3 winning setups, perfect for short-term traders. And how to bottom fish like a pro. I love it. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you'll have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. So until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.